Good evening and a warm welcome to you. As people are starting to come in here, so I'm going to be saying good evening a few times. So a good evening. Oh, now it's typical. I've just logged in and I'm getting messages coming through to me. All right, let's go. Get rid of all that. Typical messages come through. But anyway, do pop a message into the comments box. If you're watching this live on YouTube, I can see the comments as they start coming through. I'm just trying to figure out which screens I want to have where. I think I'll move that one over this screen because then I'm a bit closer to looking towards you. So I've just got the camera up at the moment. Hi Naz. I will may turn the camera off once we start going to the screens. We've still got 5 minutes to go yet until we can actually get started anyway. So, but I always like to turn it all on early just to make sure it's all working okay. So let's see where people are based in the world. Hi, Boris. I can see there's plenty of people in already, so let's see where people are based while I just take a sip. I'm here in the UK, and about 50 miles west of London. Let's see where some of you are based, whether you're in the UK or elsewhere around the world. Okay, you're in Texas. Nice. Do you know what? I've never been to Texas. I really want to go to Austin. There's one place I'd like to go to, but yes, so I'd love to go. Canada, Darryl. Naz, Coventry. A bit closer to home there, Grady. Nazmul, your big issue is knowing where the trend will go and end up entering too early and then get stopped out and it goes to my original direction. You're from London. Yeah, okay. Well, obviously this is going to be a highly interactive session here tonight. I am going to do a little bit of market analysis. I think that's what it was labelled, live market analysis and chat. So there'll be plenty of time to try and answer questions here as well. It sounds like you're lacking a plan, Nazmul, to be honest, but we'll go for all of that. BVB, you're in Slovenia, and DTEX hasn't said where DTEX is from, but yeah, keep the comments coming. And if you've got any questions, then by all means, you can always pop them down, but I'll be going into market analysis first, and then I'll be coming to questions. So, but you can always pop them in if you want to now. Now, officially, I can't start until the top of the hour, until 7 o'clock. And so, DTEX, you're in Manchester. Thanks. Right. So, again, a bit closer to home there. Now, I was up in Manchester, DTEX, in the earlier summer. I saw the Eagles at the new arena there. Is it the... can't remember what they call the arena now. Is it the OV or something arena? Anyway, I saw the Eagles up there. Fantastic. Yeah, fair enough. There's a reasonable number of us already here, and so I only get to see a certain amount of people logged in because I use obviously a streaming software in order to set all this up. So I'm not actually personally in YouTube. The software's routing me through. Traffic Cake. Hi, Traffic Cake. How are you? I know Traffic Cake. whilst I'm still waiting on some comments, I'm just making sure, okay, that looks like it's all right. Simultaneously in my trading room, one of my experienced traders is literally running a session in my trading room at the moment, so I'm just making sure that he's all set up because I have to remotely set him up. AO Arena, that's it, yeah. Yeah, Co-op Live, that's it, yeah, or the AO, right, okay. I forgot what it was called. Yeah, hi B. Well, I think we're just coming into 7 o'clock, so we can actually get started. So what I'm going to do is I think I'm going to say hi and goodbye as far as having the camera on, because otherwise you're going to see the side of my head the whole time. I'm going to be looking at this chart here on my right screen. I have 3 screens. I don't know what sizes they are. I forget. Whatever, 30 something inches, 37 inches, whatever. I have 3 screens. And that's all I use these days. I don't have a need for stat screens like I used to, because I don't need that amount of screens for the style of trading that I do nowadays. So anyway, so what I tend to do, just so you know while we're sat here, I have my charting screen here. The middle screen I usually have my emails on, plus my trading room. My trading room is sat on a tab behind you guys and girls here this evening, and so on the 3rd screen that I'm looking towards you on. Other than that, nothing much. I've got some supplements on the side behind me. My dog's behind my head there, and that's probably about it. There's not much else to say, but this is where I conduct my day-to-day. It's my home office, and this is where I work day-to-day. So there you go. Right. Grady, no. No, I only do those at a particular time, but I will be doing them again, yes. But no, I only do it sort of once a year. Right, let's. Okay, it removed my audio, so I think my audio's back. So it looks like it needs the camera on. Okay, oh well, it removed the audio. You can still hear me okay, yeah? I'll leave the camera on. That's where we're going to be by the looks of things. So, sorry about that, but it looks like it's going to be a camera on job. Right, can I just double check that you can still all hear me okay before I get started? I know there's always a delay from me asking a question because it's delay coming through. Great, thank you, SG. Yeah, great. Okay, let's get started then. So what I'm going to do to start off with is just have a little look around some of the key markets. As you can see, I've got the S&P, I've got the cash index for the S&P 500 here. So we're just going to have a top tier. We can only Andy, yeah, nice. So we're just going to have a quick look across some of the key markets. I tend to, like probably many of you, tend to trade or at least analyze some of the key markets. So US markets, some of the major currency pairs, gold, silver, oil, the usual culprits really is what I'm looking at. So let's have a look at the S&P, because I think it's quite interesting, the S&P at the moment. Because we're hovering below that 6,000 area, generally speaking. We're not that far away from 6,000. So 6,000 has been touted around a little bit in recent months. And just back in the summer, when the S&P had a bit of a dip, you wouldn't have thought it would be edging closer to 6,000. But I do think that we need to be open. People need to be open to the S&P getting to that big round number. Now, This is the cash chart that I've got up at the moment. And I'm just going to take you out to, well, really to a monthly chart first of all. So you can probably just about make out, if I put the right pen on, you can see that I've got a channel, a trend line under the lows, very simple, and then one coming across the tops here, which gives me a channel. So if this is on a monthly time frame, I'll just switch the channel, the time frame over here. But if the S&P did have a run into the end of the year, and I wouldn't discount that from happening. So we're in a very, very strong market. Whether if we want to make a case for it being overbought or overvalued on a valuation basis, PE ratio basis, we can make all those arguments. But as most of you know, the markets can remain overbought for longer, as we know by the saying, than traders can remain solvent. So I wouldn't write off that from happening. I think it's good to be cautious right now, what with the upcoming elections. When I say cautious, I just mean that, of course, I think we have to be open to the stock market at some point in the next couple of weeks prior to the elections, maybe just pulling back to some degree or so. We have to at least be open to that. But the trend is up. And at some point, the potential to get to 6,000 and potentially further, because if I just go back to the monthly chart, my upper trend line is up here more around closer to between 6,150 to 6,200, 6,200. So I wouldn't want to discount that here. One thing I've been saying for a long time, and I appreciate I haven't done one of these sessions, these live sessions for ages. And always with the best of intentions, I think, oh yeah, I'll do them more regularly, and then I forget, and I just get so involved in my trading community that I forget to do, outside of doing regular YouTube videos, I forget to do these live ones. But anyway, so one thing we've been saying for a long time is we've been riding this wall of worry. Now, a wall of worry is an old expression in the markets, whereby I need to come out to the weekly charts really to show the lows from October of 2022. That bear market, well, after that bear market, so basically since the end of October of 2022, the market's been going up. And yet, throughout 2023, it was very bearish, lots of people looking for the stock market to roll back over. And the same sentiment we've seen coming into 2024 as well. I see it all the time. I get asked on social media, I get asked at events, oh, Charlie, when do you think the market's going to crash? When do you think the market's going to fall? There seems to still be, and you're always going to have people like that, but I can use that as a sentiment measure. And I get it asked on, like I said, on social media as well. And so all the time I'm getting a lot of that, then generally speaking, that suggests that there's loads of people out there globally who are still thinking the stock market's going to crash and roll over. So usually when the retail side of the market all thinks that, and analysts to an extent as well, there'll be plenty of analysts thinking that, then the market finds a way to keep going higher. And that's what's happened through 23 and into 24, into this year as well. And so the backdrop, the sentiment backdrop, has been supportive to higher prices. I think there's a couple of things to note here, what's interesting. And actually, I'm going to go to the Russell 2000 here first and foremost. Because the Russell 2000 of low to mid-cap stocks has been underperforming the likes of the tech, NASDAQ and S&P, which has been, as you know, driven by the Magnificent Seven stocks over this past 18 months or more. And yet the Russell has yet to come back to its highs of 2021. As of today, the Russell is in breakout mode here, this long-term trend line that I've got on my chart back to those highs of 2021. So it's trying to play a bit of catch up. So this still structurally looks to me like the US stock markets look pretty sound, in that they're all, to one degree or another, moving in the right direction. So structurally, it looks good. If we look at things like some of the breadth indicators, like the advanced decline lines and stocks trading above their 200-day moving averages and above their 50-day moving averages, all of those measures are looking still reasonable. At some point, it will come to an end. The party will end, of course. But one thing I think is really important. So, as far as the Russell is concerned, I'd like to see it back up at those highs there. And the Nasdaq is lagging a little bit behind the S&P. It hasn't made new highs as yet, but I'd like to think that the Nasdaq will work its way there at some point. That's what I'd like to see. I'm very much open to the markets getting a bit choppy and maybe pulling back this side of the elections, but history suggests that once we get the elections out of the way, that at some point we will get that Santa Claus rally as well. So we may still be making new highs by the end of the year. One thing I was going to say, if I go back to the S&P here, is one other thing I've been saying since the end of the bear market back there in October of 22 is that it's very rare for the stock market to go back into a bear market barely 2 years after the last bear market ended. The average stock market length is around about 5 years, so on average. So again, the odds favour that this bull market is not done. It doesn't mean to say that next year in 2025 we're going to go and have another 20% up year. We could chop around all year. We could even have some pullbacks, but within the context of this current bull market. So I think it's worthwhile just bearing that sort of thing. Just bear that in mind, that the odds don't favour a stock market crash and another bear market in 2025. Now, it's not to say that we couldn't pull back, and we will. It's healthy for the stock markets to do pullbacks, but I wouldn't write the stock market off just yet. Okay, so that's my overall view towards stocks there. Yes, let's go and have a look at gold. Now, I'm going to introduce some different stuff. I was just going through this with my trading community just today, actually, Rosanna. So, yeah, gold has come up and tested the all-time highs. And so earlier today, and it's sitting here quite fine overall. One thing with gold, again, if I come out to the monthly chart, it really puts it into context, this magnificent run that gold's had this year as it broke out of the cup and handle technical pattern. So the cup and handle is this here. So you get a cup and you get a handle. Now, if we take a projection of that, so you take the base of the cup to the top of the cup there, that's around about $800, and you add that onto the breakout area, which will call around about 2100, would be conservative. So that would give us an upside target of around about $2,900. Markets being markets, if we do run to $2,900, wouldn't surprise me at all if we end up at 3,000 to get to that round number area. Now, what's interesting at the moment with gold? So gold's firmly in a bull market, much like silver is. Now, lots of people start looking for, a market. When they see a market pushing up the way it has done, they're looking for the market to pull back. And markets will pull back, but this is a market that's very strong. Yes, you can make arguments that it could be overbought, but as I've already said, strong markets, overbought markets are strong markets. Now, I'm going to have a look at the COT report and COT report positioning here with regards to gold. So this gives me a snapshot down here of the last 10 years in relation to what hedge fund managers are doing, and large speculators in the futures markets, what their positioning is like in relation to gold. So overall, right now, their positioning is fairly elevated, not really surprising, because stock market hedge fund managers trade the right way. Retail, a lot of the time, maybe less so in gold actually, to be fair to them, but a lot of the time, retail are always looking to do the opposite of what a market is actually doing. Hedge fund managers don't tend to do that. They're usually trying to get in or be in the direction of the trend. So their positioning overall is close to the positioning highs of 2019 and 20 and of 2016. But it's not at new highs. So it's close to those, but it's actually just pulled back slightly, their positioning, their long positioning. Sorry, their overall net positioning, which is long. And so it's just pulled back slightly recently. So I don't think we're at an extreme, is my point. We're not at an extreme in positioning. If the positioning was right up here at new highs for the last 10 years, then yes, I would be saying, okay, they're getting to an extreme in positioning. And a good example of that is the Canadian dollar positioning just up until several weeks ago. Looking back over the last 10 years, it's the opposite, but their positioning was massively net short. So way below any historical net short positioning levels. Now that's an extreme down there. Right, so if we come back to gold as far as positioning is concerned, what I'm trying to say is there is scope for positioning to still push further north. And normally when it is, that means the market that this corresponds to is still going higher, i.e. gold. So what I'm trying to say is I don't think from a positioning perspective that we're at an extreme yet. If gold does get up into that upper 2000s, around 3000 area, I will be looking out. I'm just giving you a little heads up here. Now, this could be several months away yet, but I will be keeping an eye out for things like that positioning there. And then I'll be looking from a sentiment perspective, the usual stuff, looking out for articles in the likes of Reuters, FT even, The Economist magazine, you name it. Anything where they're start talking about how well gold's gone on, I'll be looking for that as well from a sentiment perspective. And I would be using that as an indication that we may be getting closer to some sort of high or top. No, I'm not making any massive call on the gold topping out at 3,000, but certainly if those sentiment extremes are there at that stage, then it could be that we're due a pullback because there'll be more things coming into alignment for that. So I do think that's something to keep an eye on there. But so overall, gold's in a great trend, as we know, coming back to Rosanna here. So do I think gold is a buy right now? From a technical perspective, no. Really, the opportunities to be buying gold were a while ago. And so, yeah, I'll have a look at the Aussie as well. Yeah. And so it's just come up into a prior high. Overall, I see the scope for gold to go higher. But you have to look at it. If you're trading, you've got to look at where you're getting in, where your stop loss is relative to your target. So, and still try and find a reasonable risk to reward. So I'm not saying that right now, if you bought it and then popped a stop below that low from last week, oh yeah, okay, you would still get a reasonable risk reward on that. But nevertheless, is gold in a ideal position overall? Because it could still, just because I'm bullish on it over the, I'm bullish over it on it over the months ahead, it doesn't mean to say that it couldn't imminently be due a little pullback. So for me, I don't really see this as a buy right now. It's not that it couldn't just blast off higher, but you've got to have a plan. You've got to have an entry strategy and all of that. So for me at the moment, it wouldn't be optimal to actually trade it. Yes, I'm the bull, but I would need something else. So in my community, my traders were some of my members were buying it. We have a given setup, and that came in, fun enough, when we broke out here. We have a given setup there. But I haven't actually got anything. Sorry, it was here. My apologies. Yeah, it was here. But I haven't got anything fresh at the moment. But yes, I am an overall a bull towards gold and silver for that matter. As we head into this period of the year, November, December, again, from a seasonal perspective for gold, it tends to be a more favourable time of the year for gold anyway, seasonally speaking. Again, nothing is guaranteed just every year that it's going to be like that, but more often than not, it's a more positive period for gold. But gold's been going up anyway, so. But anyway, that's my general view as far as gold's concerned. Now, as far as the Aussie dollar is concerned, I think these are quite interesting right now, all of these currencies. I'm actually going to come out to the weekly chart to discuss the Aussie dollar. I'm going to just take my trend lines off for a moment. The Aussie dollar, yeah, exactly, Timmy. Yeah. The Aussie dollar, my black moving average on my chart is my 50 moving average. So there we go. That's my 50. So when the Aussie first broke down through the 50 on the weekly time frame here, it came up and it retested the 50, like so often is the case. Back again over here. Yeah, had a false breakout here, tested it here, got close to it again here, false breakout here. Essentially, what's going on constantly through all of this is these numerous attempts at trying to break out through the 50 and then just failing and rolling back over. And then what was interesting that we've seen just in the last few months is that the Aussie has started to not only make this high here, then it pulled back, but then came back up to make a new high in this move here. So this looks really encouraging now on the medium term here, the weekly time frame. So although we're in a bit of a pullback phase at the moment, this is encouraging overall. The 50 is sloping to the upside now, having been in a downwards trajectory for the previous 2 years. So although, taking all that off now, although the Aussie has been pulling back just this last 2.5 weeks, that doesn't detract from the fact that actually it made a spike low back here in July, whenever it was, but we're actually making new highs for this move overall. So yes, we're doing, and therefore just doing a bit of a pullback here at the moment. So until proven otherwise, for me, the Aussie dollar could well be in its infancy of still more of a trend to the upside. So that's how I'm generally looking at the likes of the Aussie here and others as well. So I think they're fascinating what they've done, because they're doing some deep pullbacks. If it takes back to a daily chart at the moment, just in this past 2 weeks, it's done quite a fast, sharp pullback, but it doesn't really detract from the bigger picture that I'm just talking about there. We just need some clues to come back in right now, and we need some events to take place. I wonder what events might be taking place in the next couple of weeks or so. I don't know. If anyone wants to jog my memory, then by all means do. So, so we've got a lot coming up. Even tomorrow, we've got retail sales out of the US. We've got the weekly job unemployment numbers. But going forwards, of course, we've got the election. We have FOMC just 2 days after the election. Then we've got 1 day after that. They're all crunched in. Then we've got the jobs numbers on the we've got the jobs numbers on the 1st of November, on the Friday before. Then we have the election on the Tuesday. Then we have FOMC on the Thursday. There's a lot coming up. So, and that's all what we're on the 15th of October right now. So really in the next, we're on a Wednesday. So in just under 2.5 weeks time, it really starts to build. So I think it's a fascinating time in the markets. It always is when we come up to US election, the point of the US elections. Again, it's going to be it already is being highly contested, the US elections. It's pretty tight. Obviously, the polls are swinging either way. This week, they've swung more in favor of Trump. But it's going to be a it looks like it's going to be relatively tight. We don't know. And when there's uncertainty, it makes for volatility. So, and we don't know what the election result is going to be and how the market may respond. Now, traditionally, if Trump gets in, the general thought process is that should be dollar positive for the US dollar. So therefore, the Aussie dollar, in theory, should go down. But these are the theory books. And if the consensus all think one thing, then quite often something else happens. So we shall have to see. And so why is it why does it seem to be more dollar bullish? Well, he has very much a pro-business attitude, wants to cut taxes, but he's gonna, as you know, he's looking to increase tariffs and things like that. So that could affect rates, and therefore, as a byproduct of that, the dollar may well benefit as a byproduct of that. But we shall see. So anyway, whatever way we slice it, we've got a lot of data coming up over the next 2 weeks, 2 to 3 weeks. And so I think it is well worthwhile keeping an eye on the Aussie dollar. I'm talking big picture here. I appreciate some of you are very short-term traders, but I'm talking big picture here, and what I'm seeing, the potentials at least here on the Aussie. So for me at the moment, taking it back to a weekly chart, yes, it's pulled back over this last 2.5 weeks, but really, unless the Aussie is back down probably sub 65, I'm seeing this as a pullback within this current move that's been in play really since October of last year when we made these lows. We've been chopping and trying to break out, and we've just started tentatively making new highs above the highs from late 2023 and of course the earlier highs from this year. So until proven otherwise, as I often say, I think the scope for the Aussie is still there to turn back to the upside. Oh, right, okay. So Timmy's just said, sorry Timmy, I've only just seen your comment here. You weren't seeing my pointer. Let me just see. I'm just going to have a look here because I've been using a pen. Oh yeah, you're absolutely right. My pen. I've been using I've got a pen here and it's not showing on the broadcast. Oh, you can see it, D-Tex. Phew. So some people can see it and some people can't. Okay. So some of you could see the... Hi, Rob. Nice to see you. Some people can see the pen, some can't. I can't help that. So, okay, so that's the Aussie. Any other requests to have a look at anything here? Yeah, okay, Timmy, I can't help that. Some people can see it, you can't for some reason. I don't know why. It wasn't showing up on my screen over here, but anyway, let's carry on. So JB's asking about the dollar index and saying, can the dollar index be used as a timing tool for entering the euro dollar? He says that he knows they move in an opposite direction to each other, but in terms of timing for entries, not really, no, because for the very reason you sort of asked your own question, answered your own question there, JB. They pretty much move in opposite directions at the same time. So it's not really going to act as a timing tool, because as the euro goes down, the dollar index is going to be going up. So they're both doing the same thing, just in reverse, as almost as a mirror image of each other. So, for example, as we can see right now, the the US dollar is coming back to its weekly. I've got the weekly chart on, weekly 50 there. Well, what's the euro dollar doing? Oh, it's pulled back to its weekly 50. They're not going to be completely perfect mirror images of each other, but I don't really see it as a timing tool particularly, no. No, so not overly. Can you look at Bitcoin? Yeah, absolutely, Darcy. And so if I come over to Bitcoin, because Bitcoin's just started to perk up a bit, isn't it? Just really, what I find interesting with Bitcoin is what has happened since that August snap low. So when we made the August low, bounced, so we've got up to 0.1 here. Then we've come down to 0.2. What was really interesting is when at the end of September we got to 0.3, because at 0.3, now I appreciate some of you can't see what I'm talking about, can you? 0.3. I'm just realizing. Okay, I'll turn the pen off and I'll just use my cursor. So what I'm talking about is this high here. So you can see my cursor now. So this high in late September breached the previous high from late August. So that confirms that this low at the beginning of September, you can't see the cursor either. Okay, I really can't help you now. So the low there, I'll just make sure there's not a, let me just hide that. There's not a tool within the software here. I'm not seeing a tool within the software. I will. So that confirms we've got a higher low. At this point, in technical analysis terms, we've got a higher low. So that low of Friday the 6th of September is a confirmed higher low. Make the window active. Is it not active? You are seeing my screen, aren't you? Yeah. Yeah, you are. Yeah, I can see you seeing your screen. So, oh, hold on a second. I've got a pen tool here. Oh no, it's a. Oh, no, it's not. So, I'm getting put off here, so I'm going to have to carry on. So we've got a higher low here and a higher high. So that was a key point. Once we come up again into late September, we confirm a higher low. So when we pulled back into the beginning of October, I was uber bullish at that stage. As we pulled back into the daily 50 moving average, that could well be a very nice little technical setup into that area there, around the sort of 60,000 area. Yeah, we had a hiccup coming into last week, into last Thursday, but it didn't amount to anything. So yes, Bitcoin, it's really not that far away from the all-time highs. The all-time highs are what, 73,000 or so. So we know how Bitcoin can move. It could go there in the space of less than a week. So it is looking quite encouraging at the moment. Again, a Trump presidency, as most of you know, he's talked about Bitcoin quite a lot, and Bitcoin, if he wins, may well benefit from that because he's been talking about it a fair bit this year. So, but nevertheless, forgetting politics, and I'm just talking about the odds of one person winning and what the variances are of one party winning or another. The bottom line is, doesn't matter which party wins, Bitcoin is in a bull market. And yes, it's been chopping since earlier this year, since it's making the high in the spring, but overall it's in a bull market. And so, and again, and I've been saying this all year, really, until proven otherwise, it would have to sell off a lot in order to disprove it being in this nice bull market. So there's nothing changes there. So where do I see it heading to? Well, Darcy, between you and I will let you in on a little secret. I did a bet with Alessio Rastani at the beginning of this year. Well, not with him, but I was being interviewed by him for his channel. And I said, if Bitcoin doesn't go to 100,000 by the end of 2024, I'll eat my hat live on air. So I am hoping that Bitcoin can get at least close. Look, if it gets to 90-odd thousand, I'll say, yep, we've done it. So I'm hoping it does, because otherwise I'm going to have to eat my hat. So there you go. Yeah, and Bitcoin quite often perks up in October, like you said. So it was October of last year that it started to rally. Obviously, that was on. You've got to remember, October of last year, it was because the ante was upped in relation to the pending Bitcoin ETF. So there was a lot of calls for that, and it was looking more and more likely, and so speculators were piling in. So there's some big funds going in at that stage as well. So late last year, but anyway. So, but it does seem to be a bit of a pattern there for that sort of time of the year. Yes. Yeah, you're seeing 86 to 88. Yeah, I'll take that, Ash. Yeah, I'm not going to get that technical with it. I know there's been a lot of price forecasts around that sort of area as well, mid 80s. So yeah, I'm quite happy for that. Maybe I'll only have to eat half of my hat if we can get into that area. So we'll see. But I have been invested in Bitcoin this past year, but I don't trade it. So I just have a recurring payment going out every week, and which I set up at the end of October, I think it was last year. And so that's what I do. So to give myself some exposure to it. So I don't trade it, but I do buy a bit of Bitcoin every week. Right, DTEX. Peter Mills, I'll come to your question in a minute. I've just realised I've missed a question up here. DTEX, a bit off topic. I know you're not an accountant, but have you ever done a video on tax implications of trading, i.e. self-employed, trading through a company, etc.? No, I haven't, DTEX. Where are you based again? You're based in the UK, aren't you? So I do think that for people who are trading, you're in the UK, was it yourself, DTEX, that was in Coventry, I think? You're right, I'm not a tax advisor, but I would suggest you to look at spread betting nowadays. Spread betting is far better than it ever used to be. And so for people in the UK, you can spread bet, it's tax-free, then you don't have the same tax issues with spread betting. Obviously, I don't know what markets you're trading, but if you're currently trading CFDs, then I would suggest having a look at that, because they are a lot better now than they used to be. Right. Yeah, you want to know your options. But outside of that, yeah, I think that it's such a personal thing that you would need to speak to an accountant. Other than just talking about the tax-free nature of spread betting, outside of that, I can't give advice on that. It's one of those things that I just can't. I wouldn't know anything about your personal situation. But what I can say is, yes, some people do trade through a company, especially if they are very active in cryptocurrencies, I've heard. Um, but most traders tend to trade individually, but it does vary, and it depends on your own situation. So, sorry, pay an accountant and get some advice from them. Oh, okay. So you are trading CFDs. Well, I would say, yeah, go down the CFD. I would take a good look at the spread betting route, the tax-free trading route, because bear in mind they are just a wrapper. So a spread bet is just a wrapper, a tax-free wrapper around a CFD essentially, and then it's rebadged into trading in pounds per point rather than in lots. And so many of the brokers have made their spread bet trading much better than it used to be. And what do I mean by that? Well, I used to get more slippage on things like spread betting than you do now. They're much more in alignment with each other. So, yeah, I think that that's something that you can, as a trader, you should be looking at. Yes, yeah, RH, yeah, absolutely. Right. Ashton, that's very nice. I don't know how I've helped you in the last 5 years, but thank you very much for the comment. Peter, coming back to your question, you've just discovered me and found out about my membership, etc. What kind of trading strategies can I learn from it? Is it predominantly day trading or swing? Okay, Peter, if you've only just discovered me, I would say don't even join me. You've only just discovered me on YouTube. I like it when people join my membership who have already maybe followed me for a while. So take your time. But if you don't want to take your time, you're welcome to join. From my perspective, it's predominantly swing trading nowadays. I used to day trade, but I don't day trade anymore. Time is all important. So I don't. But it's not to say you can't take my strategies and apply them to intraday charts, because you can. But what you won't be seeing is me looking at 5-minute charts all the time. I have a trading room, which one of my members is running a session whilst I'm doing this live session with you tonight on YouTube. But and so I do countless sessions a week, every day, 3 or 4 sessions a day that I'm in the trading room. But it's constant updates on analysis, training sessions, educational sessions, live news sessions when there's big key events coming as well. It's all of that. So I will trade live in the trading room, but it's usually because I'm putting a swing position in. So that's it. So it's more swing trading, if that answers your question. But by all means, just try us out anyway. So you can try us out. We're not locking you in for 5 years. So one thing I would say to you, Peter, though, is when you come over to the homepage, if you come over to charlieburtontrading.com, I've noticed my web chat, Matt, has put, if you scroll down, the documentary, the BBC documentary is on there. If I click on watch now, this was a BBC documentary I was in about 10 years ago. So if you haven't seen that, check it out. It's on charlieburtontrading.com on the homepage. So scroll down and you can watch that. I was part of this documentary that aired called Traders Millions by the Minute about 10 years ago. Was it 10 years ago? Yeah, about that. Oops, what am I doing here? Right, next questions, next comments. Let's have a look here. Shadow, do you look at market structure when looking at trading opportunity, i.e. high highs, high lows, etc.? Yeah, that's exactly what I was just talking about, actually, Shadow, on Bitcoin here. So yes, I do use moving averages as part of my analysis. I use trend lines, traditional support and resistance levels, but and that is what market structure is as well. It's traditional levels when we're looking at the price action generally. What is it trying to do? What's the message it's trying to send, and until proven otherwise. So the yes, I am indeed looking at all of that. Yeah. So, but what I tend to do is it's a top-down approach to my trading. It's a top-down approach plus an intermarket analysis approach as well. So I'll use multiple time frame analysis on the higher time frames and work my way down through them. That forms the foundation of the analysis, that in conjunction with intermarket analysis. So for example, you've already seen me talking about the NASDAQ, S&P, Russell there earlier on. I didn't even talk about the Dow. But if I'm looking at the stock indices, I want to see congruence. I want to see the stock indices doing a similar sort of thing. So that's intermarket analysis. It's the same with the currencies. I won't just look at a single currency and then make a decision just based on what that's doing. I want to see similar sorts of things going on within the analysis across other currency pairs as well. So yeah, intermarket analysis is very important as well. DTEX, I've heard you have problems with them if they can prove you're earning a living from CFDs, but I need to speak to an accountant, obviously. I think you mean if you're talking about spread betting, I think you meant to say there, DTEX. If you're making a living from spread betting, yes, again, you'd need to speak to an accountant from that. If it's your sole source of income, then I hear that the revenue may still see that as taxable. So my advice to you is make sure that it's not your sole source of income. There you go. Is there a divergence for me on the weekly chart for the S&P? There was. Let's have a look. Down here on the MACD, it's making, I don't know if you can see my pen, but we are making generally lower peaks in the MACD on the weekly chart there. If you can't see these peaks, I'm talking about the peaks from April, then to the lower peak in July, and then the current lower level of the MACD line there at the moment. So yes, it is. But again, as you've already seen, the S&P is still a lot higher than where it was in April. So there are some divergences potentially brewing there, or a divergence in potentially brewing, but it hasn't amounted to anything yet. But it's potentially there, yes. So I am aware of that. Who was asking this? Ao Yi. So yes, but until it starts to react to that, then we can discount it. So right. Are you surprised that the euro-dollar has continued to range? Yeah, a little bit, Timmy. I say that. I think in the market, you should never be surprised. You're constantly surprised, but you should almost expect to be surprised, is what I'm trying to say. So I'm constantly surprised because, I was thinking that the euro would have held up better, and the other currencies as well. So if I go back to the euro here, and the Aussie, etc., I thought they might have held up a bit better after the euro got up to 112 just 2 weeks or so ago. Literally in the last 2.5 weeks, the euros come off, the pound dollars come off, the Aussie dollars come off. So I thought they might have held up better. So in that regard, yes, I'm surprised, but I don't think you should ever be surprised. So yeah, you say, oh yeah, that's surprising, but nothing should ever surprise you. So we'll see what happens over the coming months ahead. But as I was saying with the Aussie earlier on, I think the Aussie, so if I take this back to the Aussie here on the weekly, but if I go to the weekly chart of the euro as well, again, it's just a pullback. And until unless we see some technical damage, so to speak, that is a market that since October lows of last year for the euro, it's been making new highs. They're loan off the lows from October of 2022. It's the same with the weekly chart with cable. So although they're having some bit of pullbacks going on at the moment, well, there's no technical damage going on. If I go back to the Aussie's only just in this early phase potentially of itself of getting going. So again, it's just a pullback until proven otherwise. So there's not actually any technical damage going on with these at the moment. They're just pulling back. So we'll have to see. Coming back to your question there, Timmy, we might find out a little bit more in the weeks ahead. But there's a lot of news coming out, as we know. Can you explain hedging strategy, Charlie? You can't wrap them around your head. The problem that I've realised, B, is that my pen isn't visible to you, is it? So I would really need my pen in order to be able to be visible to you, in order for me to be able to cover hedging strategies. So I can't. I'll tell you what I'll do, B, is I'll do a video on hedging at some point in one of my normal YouTube videos. I'll make a note of that and I'll do a video on hedging. One thing I think you need to be aware of, B, I don't know where you're based in the world. If you said earlier on, I apologize because there's so much chat going on here. But are you in the UK? B dot, you've asked about hedging strategies. Are you based in the UK? D-Tex, Job Centre Plus, yeah, perfect, yeah. I'm still waiting for B to reply, so he's probably typing at the moment. So what I was about to say is in the UK, the FCA here in the UK are looking at brokers and encouraging brokers. They're giving guidelines. Oh, okay, right. Well, in the UK, and it will be happening in Europe as well, brokers have been given guidelines about making it more difficult for people to hedge. So they're actually stopping people from being able to hedge. So you'd say, well, why is that? Because, as you know, 80% plus of retail traders lose money. And the problem that is the bugbear of my life is that so many of them don't use stop losses. So what happens is they get into a position, so they buy, the market comes down, and they buy some more with no stop loss, and then they buy some more, then they buy some more, and they get themselves so underwater that they think, I know, I'll just hedge, and then they put a sell in. So now they're stuck. They're both long and short, stuck in a position, and end up stuck in position for 6 months, 12 months, eating away on swap fees, overnight charges and stuff, and blow themselves up. So the FCA have given a directive to the brokers over here, and I'm sure it's the same in Europe, that they're not forcing brokers to stop hedging from going on, but brokers will take their guidance and are starting to either not allow hedging at all, or they are starting to require more margin in order to do it, because they're just trying to put retail traders off who are hedging losing positions. So the way that I've always taught hedging is there are points when you're in a profitable position that you could put a hedge on. So that's the complete opposite. So, but I could do a video for you anyway. But yeah, I know a lot of people here in the UK, are not going to be able to do it, or it's being limited across the UK and brokers here. Double click to make it bigger. Okay, I don't know that. Is there any trader meetups you recommend in the UK? Well, I'm at a trader show next Friday. Actually, Shadow. There's one in London, West London, in Hammersmith next Friday. So check it out. And I think it's called the London Trader Show. So there you go. I'll be down there myself. I'm going to be down there with Tickmill, actually. Tickmill are a really good broker. I have I've had a relationship with them for a couple of years now, and so I'll be doing a presentation for them whilst I'm down. I'd like to know about this shirtless. Oh, okay. Yeah, Seb, I can't read out swearing. So yeah, Seb, yeah, let's keep the swearing down, Seb. I don't like swearing that much. So, but I know who you're talking about, and so I'm now going to reread your comments here. Yeah, what you need to do, Seth, what I've done on YouTube, I know you might not want to do it, but I now I pay for YouTube Premium, so you don't get any adverts. So I don't get any adverts coming up, so I don't see any of that stuff anymore. But I did used to get his adverts, and I used to love them. I used to love seeing him in his latest swimming pool or whatever. So yeah. JB, you bought EU today, weekly 50, 4-hour diversions. Yeah, cool. You've got a strategy, you've got a plan, and that comes back to one of the people earlier on was saying about, I don't know if he's still here, talking about doesn't know when to exit trades and where a trend may end. That's just a lack of a plan, and that's having a trade plan is having an entry, a stop loss, and an exit. Now you can either use a targeted approach for an exit, or you could have a trading stop based approach, but you have to have a plan around that. So the more defined your plan is, then you have a load of rules to say, right, I'm going to enter on this whatever pattern, whatever it might be. I have a load of strategies and patterns, yes, that I use. And so I'll have my entry techniques, I know where I'm going to put my stop, and I know what my target's going to be. That's a plan. And so coming back to that comment up there, then yeah, it sounds like that person's got JB's got a plan there. Retail traders are always going to get trapped. Well, they do, because they trade on emotion, Timmy, and that's the problem. And so, as many of you know, 90% of trading is psychology. It's not the technique necessary that you have. And so, and the problem is, so many of those retail traders out there don't have a plan as such, and they trade on gut instinct a lot of the time. And so, yes, they do get trapped because they find themselves they're trying to be right all of the time. One of my biggest bugbears in trading is traders trying to be right. And you're probably thinking, what's he talking about? Well, you've got to be right. Well, yeah, you have. What I mean by that is people fixate on trying to have high win rates, and so therefore trying to be right as much as possible rather than looking at their overall profitability. And so what people will do in order to try and be right is do things like not use stop losses, because they'll be like, oh yeah, but the amount of times it comes back. And they'll use this self-talk, this self-language, saying, oh, it always comes back. I'm just going to stop using stop losses. And that is the end of them, because they stop using stop losses. And of course, at some point, that market that they say has always comes back won't do it. And it'll go down and down and down and down, and and then they'll blow up. So that's what they do. It's this desire to be right as much as possible will send people without a plan, without a strategy, so to speak, an overall trading plan, an approach to the market. Then what they end up doing is just not using stop losses. And I get this feedback all of the time from brokers, because brokers can't tell their customers what to do. They're not allowed to. So, but that's the problem, and it's a huge problem. It's not something that's new. It's gone on throughout the decades. So it's nothing new. It's just human nature, and lots of newer traders do it. Some newer traders learn from it. They learn from their mistakes, and they become a different trader with time. But for a lot of those retail traders, they'll end up quitting and giving up because of that type of trade. Right. You got trapped in a China dump, lost 80% on your long possession in 10 seconds. Yeah, no stop loss then. So, yeah, that's my point. Right. Seth, I have seen all your other comments about him, but I don't really want to get into anything about any individual particularly. Yeah, you're better off to turn your adverts off, or say where you know when an advert comes up, if it's annoying you, just hit the little 3 dots and say you're not interested in this advert, and then it works. It should stop. Charlie, regarding the MACD, Martin, hi. It can be a useful momentum price divergence indicator, but do you not find it can be misleading, especially with trending markets like the S&P? Yes, of course. But isn't that the same with pretty much anything? Nothing is 100%. And so what it is a case of trying to apply these things in the right context, and expecting that if you're wrong 50% of the time, but you're right, let's say your win rate is, let's say, 50%, that's all you need in order to make money, and not worry about the times when it doesn't work, so to speak, like with any other strategy. So yes, but I think yeah, it's about trying to find that market context, and that's why, coming back to what I was saying earlier on, I spend a huge amount of time in analysing the market. So trying to build that market context, like I was saying with the S&P earlier on. If I come back to that, I'm talking about, well, we're in a strong trend here. What was I saying earlier on? The potential is there to get to 6,000 or potentially more. So I would, again, I'm not, someone mentioned these divergences that I'm well aware of, that are there on the weeklies, but it's a strong trend. So like you quite rightly said, I'll just discount it, unless there's something else going on, then yeah, it's just a case of, yeah, picking your battles really with that sort of stuff, and that comes from the analysis a lot of the time. Shadow, thank you. The Scottish guy or the Barclays trader? Oh, sorry, what's this, DTEX? You'll have to enlighten me on that. I'm catching up on comments here, so I don't know what I've missed there. I got so many BS ADs or whatever his name is and I'm YouTube Premium for more than a year, happily. Oh, okay. Oh, I see. You got a load of adverts and stuff. Ads. Oh, I see. Ads or whatever. I don't know. Yeah, I'm on YouTube Premium. I must admit, I know it's £12 a month, and people don't necessarily want to pay for it. But it's great watching a YouTube video without any adverts coming up. Yeah. Oh, there's ad blockers as well. There you go. So you don't need to saying you don't need to pay. You can put an ad blocker on. Okay, I don't know. $6 for you, right? Okay. Do you think trading is similar to similar to poker? Personally, you think it's the best way to view it? Yeah, I think so. You're constantly trying to find out and ascertain where the market really wants to go. Just when you think the market wants to send you one way, and it's going the other. And so, yeah, it's that's what I love about the challenge of trading, is just trying. It's like a game. So you're trying to work out the game, and that's what I love about the market so much. And that's why, although I have trading strategies, so entry techniques, and they can be used mechanically. You know, what I mean by mechanically is, okay, that's the pattern to enter. Here's your stop loss, and here's your target, sort of thing. So you can do that, but I don't really get any enjoyment from that type of trading. So I like to use the entry technique itself, but encapsulate it in my overall analysis, and that's what I get enjoyment from. So working out the game, so to speak. Sorry, I'm trying to write, because I'm way behind the questions. People have written stuff which was in relation to stuff I've already said, and I'm trying to work it out. Yeah, I don't think he's so big. I don't think you reporting him he pays inordinate amounts of money for advertising and stuff. So I don't think you reporting is going to make any difference. I think he's within his rights. Like many of these people who advertise on social media, they're quite within their rights to advertise. So the best you can do is block. Yeah. Can you look at dollar yen? Yes, I will do. I'll come to that, Christian, in a minute. Have you read the fund book about Ray Dalio? Oh, no, I haven't. You just started. It looks good so far. Yeah, I haven't. I may well pick that one up. Thank you for the recommendation. Is swing trading? I am going to go, Christian. I'm going to go to the dollar yen. I'm just trying to catch up on questions first. Is swing trading only the right way in the end? No, I don't think so. I think with trading, I think for more people, it probably is, because the noise that you get on an intraday chart, you need a lot more discipline. And the problem is, with all that intraday noise, it lures people into over trading and doing all that sort of thing. So for that reason, I think emotionally intraday trading can be very tough. I'm not saying that swing trading doesn't challenge you emotionally, because it does as well. But when the market's doing this live in front of you, there's a lot more temptation. So, but don't get me wrong, there are some brilliant day traders out there as well. Dollar yen, yes, I'm coming to dollar yen. I'm just trying to work my way, Christian, down through most of these comments before I'm so far behind. Oh, no, I'm catching up. Right. B, I've just seen your comment there. I do know Tom. Yeah. You may not know that I did a live trade-off head-to-head against him 10 years ago. So at a London trader show, I think it was a London Forex show actually. Yeah. So I won that one. So, but you know, that's just one event. But I do know Tom, and so. Your swing, the fire is saying that you're swing trading dollar yen. Okay. Randomizer, you found me this week. I'd like to ask, do you swing trade NASDAQ, US bonds, German bunds in your membership group? No, not really. US bonds, I cover them in my analysis, Randomizer. I don't look at German bunds at all. And I do look at the NASDAQ. So I am always looking at the S&P, the NASDAQ, the Dow. But I'm personally, so when I say I look at them, so I do a lot of analysis sessions within the trading room. I'm not always trading them because I trade the currencies first and foremost. But I'm always going through them, and I'll highlight given patterns that may be developing in them. So I do cover them off. And don't get me wrong, as we go through any given year, there will be periods where I am trading the S&P or the NASDAQ, but I'm not doing it all of the time. So I'm always covering them from an analysis perspective, but I'm not always got money on the line in them because I might be in the currencies, you see. Dollar yen, yeah, I'm getting dollar yen. Okay, 161 target. Okay, let's go and have a look then. Dollar yen, right? Dollar yen. Christian was asking, I've forgotten the question. Yeah, dollar yen. Okay, that's it. Just put dollar yen, please. Right. Okay. Okay, so I'm going to go out to the higher time frame first of all. I'm going to put my. I'm going to go out to the monthly chart first of all. Actually, yeah. So on my monthly chart of the dollar yen, greetings. You're only in Reading, right? So there is this channel here, this rising channel on the dollar yen chart. So and the dollar yen did a bit of a throwover move. So coming into earlier this year, it broke out the upper side of the channel. It's come back into the channel at the moment. So I must admit, after the 3 months of downside that it just had, it's having a decent bounce here at the moment. Now, for me at the moment, and I don't want to put anyone off who's long the dollar yen because you're going to be in a good position right now. But I do think the dollar yen certainly is coming into a resistance zone. So around this sort of it's already hit 150 this week, between 150 and 152. So we've got these highs up here from November of last year, which are around into the 150s, that spike high over there as well. And we've got some moving average resistance as well. So it's just coming up into a resistance zone between where it is right now and towards 152. So it's got to get a hurdle above those to really free it up. So at the moment, it's just coming in. I still think it's got a little bit of upside potential there to come up, and that's back to the daily chart now, into that sort of to 151 to 152 zone. But I am seeing that as a resistance zone. It'll be interesting to see how it gets on there. But I'm seeing that as, for now, that is an overhead resistance zone where we could see sellers come in. Don't let me put you off. If you're long, stay with it. But I'm just saying it's a resistance zone which is just a bit above where we currently are in the next couple of hundred pips there. Shadow, I'll come to your question in a second. Andrew, you mentioned Steve Ward in one of your recent videos. Yes, I did. Yeah, you purchased Bulletproof Trader as an audiobook. a while ago, and I've just revisited it for the 4th time this week. Excellent read. Yeah. I think that was in relation to my rant about the trader show that I went to recently. It wasn't anything wrong with the trader show, it's just some of the people there. And but Steve Ward's there, and he's anything on trader psychology is really good. So and he's very, very good as a sports psychologist, and so he works with sports teams and the likes, and he's also turned his skill sets to traders as well. So yes, if anyone hasn't read any of his books, then yeah, I'd recommend them, even though I haven't read them myself. But I would recommend them, yes. Do banks use moving averages? Traditionally, yes, they used to, but you've got to bear in mind, Shadow, the trading industry has changed beyond all recognition at banks. Banks don't do the same sort of prop desk trading that they once did. And but there will still be elements of trading that they do, but it's very, very different generally. When they used to do systems, they used to use things like basic stuff decades ago, like moving average crossovers and stuff, because they can afford to do that. Retail traders don't have the patience to sit on moving average crossovers when they're just crossing and uncrossing and stuff. Whereas the banks, they can sit on positions and these big institutions and wait for the big trends to go. But no, the banks, they're very systematic and quant based these days. So no, they don't use that. We don't have their level of investment available to us, so there's no point in even trying to compete at that side on that side of things. Another thing that banks do that they have access to, one of the biggest things that banks have access to that you and I do not, are flows. They see the flows every single day of what their customers are doing. Remember, the banks are facilitating the orders of their customers. Their customers are what? Pension funds, hedge funds, the big players out there. So they can see the flows. And so, yeah, they have advantages there. Right, I think I have covered that. Just joined, Vinay. You've just joined, so you're a bit late there. Okay, can you quickly go over the overall market? Oh, blimey, I've done both of those, Vinay. You'll have to watch the recording. Sorry, you'll have to watch the recording. Charlie, as a swing trader, do you ever use standard deviation as a technical guide? The reason I've looked up, Martin, is that indirectly I do. So I don't use something like a Bollinger Band, but I do use techniques, so to speak, where price is moving away from the mean, so to speak, and mean reverting. So not straight standard deviation, but yeah, other ways of looking at when markets getting stretched and stuff. SMAs or EMAs? Most of my moving averages are SMAs, actually. Yeah. Will there be a challenge update soon? Yes, there will be. Yeah, at some point in the coming months ahead. The last one I did was last December, I think. So yeah, we're getting closer. What EMA? I don't use EMAs. I use SMAs. But on my chart there's just a straight 20, 50, and 200. I do use more than that. I do use other moving averages, but I don't have them on this evening because it'd just be too much on the chart. So I do use actually a 5 and an 8 MA as well as a 100. So there's a couple more that go on there. Why do you think the trading scene is so dirty and full of sharks? How long have we got, D-Tex? Why do you think respectable people are so hard to find? Yeah, well, it's quite easy, really. Why do I think the trading scene is so dirty and full of sharks? Because it's easy prey. Anything with the promises of riches is always going to be easy prey for the sharks to come in and enter that space. So the way that it is today is no different to how it was in the 1920s. When in the 1920s, in the roaring 20s stock market bubble that peaked in 29, they had countless bucket shops selling all sorts of rubbish out there, and we've seen it throughout the decades. The game just moves on. The bottom line is, man as a species is greedy, and so and in an arena such as the financial markets, whether it's stock markets, cryptos, FX, you name it, there's going to be people out there who are going to be looking to take advantage of the innocence of people who are thinking, oh, right, I could make some money in this. Yes, you can, but they're going to prey on you and make all these promises of making you thousands of percents and all that sort of stuff. So, of course, it's a way for them to make a buck, isn't it? So it's the oldest, game, so to speak. I think it's there. You see it the same in property as well, with all these property seminar companies, the same stuff across. It appeals to be anything that appeals to man's greed, such as making money. There's going to be sharks out there trying to sell to you. Simple as that. There you go. Hopefully that answers your question. Would you apply the same technical analysis to stocks as for FX, or have you found it doesn't work? Actually, quite a few of my traders, Andrew, do use some of my techniques on individual stocks, and they quite like them. So I don't actually trade individual stocks anymore, but yeah, a few of my members do actually do that. So yeah, you can. If ever I need a software engineer, oh, thank you, Shadow. That's appreciated. I don't know. Do I know you? Have you been an old member in the past, Shadow? I don't know. Right. Charlie is one of the realest traders I know. Oh, thank you, Fire. Right, yeah. No, you don't see Lambos and stuff. No. RH, would you give more weight to an MACD divergence? Ah, interesting. Or an RSI divergence, or both equal? The reason I'm pausing here, RH, is the answer is it's personal taste. Both of those indicators are good for divergences. So really then it comes down to the individual. It's a bit like if you take a classic chart pattern like a head and shoulders, you're going to have, and you have 5 different traders who are trading head and shoulders patterns. All 5 of them may look at any given head and shoulders slightly different and have a preference for some of the nuances of the 2 shoulders and the head. And it's exactly the same with something like these 2. Both of those indicators are going to show divergences, not at the same time. That's the differences. But I wouldn't recommend trying to use both. You just have to find what out of those 2, which one you prefer. So it's a personal thing, really, like I've just said there. Right, okay. Peter's saying any software jobs going. Okay, I've caught up on the questions here. Any other questions before I guess call it a night? It was, again, when I had this idea a week ago and thought, oh, I think I'll do a bit of market analysis and then a Q&A. And I hadn't done one for, I don't know, months. And I just get caught up in my day-to-day activities and don't get around to doing the YouTube broadcasts. I should do them more often. And I always say that as well. But anyway, we won't go too long tonight. What do you read in the COP reports, or is that a future stream? If you check out my channel here, Christian, there is a video. You'll need to go back, but I have done a video on the COP reports before. but I guess I could do another one. But it's the sort of stuff that I do regularly in my trading with my traders in my community. We're looking at that sort of stuff because there are certain patterns within the COT reports that we use. I don't use everything. Again, different traders will use things like the commitment of traders report slightly differently. But there are, as I've already hinted earlier on, when you get to an extreme in the COT report, but you need to couple that with what's going on in the price action as well. But you also do get divergences within the COT report as well. So it is quite useful, but it's not that every single week it's useful. There are big picture patterns within the COT report, which on any given market you might only see happen once a year or twice a year, but they're quite useful when they do happen. And we're always monitoring them across, obviously, countless markets. Best wishes, chat. Ashton, end the quarter off strong. Yes, you're out. Enjoy the rest of the day. Yes, great. You too. Thanks, RH. Sadly, you missed most of the live presentation. Yeah, it will automatically go there, Andrew, as a recording. So I don't know how long it takes to process on YouTube, but within, I guess, an hour or two or whatever, it will be on my channel in the live section. Then it'll just automatically load onto that once we've finished tonight. Did I mentor Alex Gonzalez? I've never heard of him, so don't even know who it is. Sorry. So I didn't know. don't recognise the name. Check out the group. Right. Okay. Right. I think we're getting there. I'm going to have to call it a day because it's 8:30 here in the UK. And there's loads of us here that I can see. I can see 150 people, but there's probably therefore more logged in. I'm just on StreamYard. But yeah, thank you for all your comments and questions here tonight. I know it's very high level, but I try and give some general advice when we're chatting like this, and some general, answer the questions as best as I can, and without trying to offend people as well, and get to on some of the questions there about which were quite interesting. So yeah, thank you, Louise and Sim and Will and D-Tex, and people comments are coming through here. So yeah, we'll certainly do another one in the not too distant future. How to find the group, and thanks for the presentation. Just go to charlieburtontrading.com. So if I scroll back up, is that going to work? Oh, it's got stuck. Oh, no, it hasn't. I need to go back over to the homepage. There we go. So charlieburtontrading.com. There's a bit of information on there. It's just a bit about the community. That's what you're asking there, Christian. So like I said, there's some videos on there and stuff. Have a look. But yeah. Andrew, you've been following the videos for a few years and always appreciate the unvarnished perspective. Well, someone's got to do it, Andrew, haven't they? You can get the polished stuff elsewhere. Right, I'm going to end the stream. Enjoy the rest of your days, your evenings, your mornings. Ciao for now. I'll see you soon.